Morning, everyone. We're going to give it a few more seconds for additional attendees to get logged on. Okay. Hello, everyone. My name is Hillary Collier. I'm a partner at CRI in the Atlanta office. I work with Doug Mims in the financial institutions practice. And this morning Doug is going to talk about the cryptocurrency fundamentals for financial institutions, demystifying digital assets in the marketplace. You can obtain CPE certification for this webinar. If you need to have logged into your own unique link, you'll get an hour credit in the accounting governmental technical field of study. You must answer 80% of the poll questions. We have 6 poll questions today, so please answer 5. I would recommend answering all 6, but up to you. The certificates will be distributed via email within 7 days. They'll come from the Carr and Ingram no reply certifier. So make sure if you don't get it, maybe check your junk in case it gets sent there. If you have any questions, please send them to the marketing@cricpa.com email address. And they're going to send out. They're going to upload the PDF to the Zoom chat for everyone to download if you'd like. So I'd like to introduce Doug Mims. He's a partner in the Atlanta office. He's the financial institution subline leader. He's a member of many professional affiliations, Georgia Bankers Association, Georgia Society of CPAs, Institute of Internal Auditors, and is a Troy alumni. And again, my name is Hillary Collier, and I'm a partner in the Atlanta office as well.
Okay, well, thank you. Thanks for the intro, Hillary. Appreciate it. And thank you, everybody, for joining us today. We appreciate you taking some time to participate in our cryptocurrency webinar. So I'll kind of give you an overview of our agenda today. Of course, this is a 50-minute webinar. It'll probably be about an hour, but the first time we've done this one, so it might be a little less, might be a little more. But on the agenda, we're going to cover why are we discussing cryptocurrency? We're going to discuss whether or not cryptocurrency is a digital asset, and we'll kind of go through that. We'll talk about decentralized finance, DeFi, which you've probably heard that terminology before. We'll talk about how cryptocurrency is being used. We'll cover what the current bank regulatory environment is, and really in general, what the service offerings that could be considered by a community financial institution, and some final thoughts on crypto. And of course, we'll try to address questions. We're not real sure how we're going to handle that. We'll see how many questions we get during the course. Might address them as we go, might save them till the end, might run out of time, answer none, and send you answers to your questions via email after the course. And then, of course, we want you to connect with us on CRI on social media and follow us. So when you say, why are we discussing cryptocurrency? I put this presentation together a couple of weeks ago. We need to have time. I do my thing, and then our marketing group pulls it together and makes it look good and all those things. So probably been 2 or 3 weeks, and wow, a lot has changed in 3 weeks' time. So we're going to talk about the fundamentals of crypto, but also kind of the fundamentals of why it was a conversation before the last 3 weeks. And then we'll talk about why it's a conversation and how that conversation might have changed over the last 3 weeks. But it really is. I mean, I'm kind of a news junkie, and I follow, Wall Street Journal and New York Times, and I'm on LinkedIn and Twitter, big on Twitter as far as following things. And man, there's just so much information coming out, and in particular in the last couple of weeks. So you almost can't keep up with it all. But at the end of the day, the whole purpose of this webinar is to simplify what cryptocurrency is and simplify the environment in that we're in right now in terms of getting it to a place where you can kind of get your head around it, get your arms around it. So it's kind of a basics perspective. So the first Bitcoin was mined in 2009. So Bitcoin's only literally been around for whatever that is, 11 or 12 years. The first centralized cryptocurrency exchange was launched in 2010. So Bitcoin was born in 2009, and you could start exchanging crypto in 2010. So it's very young, very, very new process. From there to 2021, at the time I did these slides, the market cap of crypto had reached an all-time peak of 2 trillion, and there were almost 10,000 different cryptos out there. At this time, though, I think it actually peaked all the way to 3 trillion. And of course, with the bust, if you will, or the decline that's occurred over the last few weeks, it's down. I believe it's under 1 trillion now, which still big numbers, but going from a peak of 3 down to about 1, and we're not real sure where that valley is just yet. So a survey of U.S. consumers that Cornerstone Advisors did, and this was about a year ago. I'm assuming that we'll get their current year results here soon, and we'll be looking out for those. So it's a little bit dated, but probably not too far off. In Q2 of last year, they found that 15% of American adults own some form of currency. So if I did the math on that right, that's about 40 million people. So about 40 million adults in the United States own some form of cryptocurrency. That number is a little more than half of those who invested in cryptocurrency for the first time during the first 6 months of 2020. So really, I think the boom for crypto occurred, I think it was last year in the Super Bowl, when they did all the ads, all the crypto ads as part of the halftime and all that, and the big commercial stuff that happens with the Super Bowl. And a lot of folks went out and they were curious, and they went out and decided to buy a little bit of cryptocurrency, or maybe a lot in some instances, but that kind of made it a more of a household name, if you will, crypto, and then also resulted in a lot of volume. So in another survey by Cornerstone Advisors, and it's a little bit dated, but I don't think it's far off based on the folks I know, 260 bank and credit union executives were polled, and 8 in 10, so 80% of those folks, indicated they were not interested in offering crypto investing services to their customers. And only 2% said they were very interested in it. So there's been a lot of interest in a very short window from consumers, but community banks and credit unions aren't particularly interested in offering services. So, and again, this is a little dated, so there's probably been some change in thought process, but we'll kind of keep going through that. And of that sample, only 19% said they were somewhat interested. So low level of interest in providing those services, at least, about 18 months ago. 60% of crypto owners say in this survey, they would use their bank to invest in cryptocurrencies if their financial institution offered the service. So instead of using some other service, some other fintech that's out there, consumers are saying, hey, I would use my bank if they offered this service. So that's kind of interesting. And again, keep in mind the dynamic between 80% of executives say they're not interested, but 60% of consumers say they'd use their bank. So they said they definitely use their bank if it offered them the opportunity to invest in crypto, and another 32% said they might do so. So basically everybody said either we would use our bank or we would consider using our bank, and only 4% said they wouldn't use their bank. So kind of interesting. 68% of crypto owners indicated they're very interested in Bitcoin-based debit card or credit card rewards. So similar to now where folks, depending on the credit card, they're, who issued it and whatnot, and you get points, you get member rewards with Amex or whomever. They're saying, the consumers are saying, in 7 out of 10 are saying, hey, we'd be interested in some rewards that would be crypto based. So, kind of interesting. And so that dynamic, plays out in that low level of interest from a provider perspective, high level of interest from a consumer. And then the backdrop of all of that, and really is the backdrop to it for me, is what I don't have is what the demographics of these respondees were, because all financial institutions are trying to engage younger people as early as they can. And particularly when you talk about community banks, how do we engage them early, and how do we keep them so that when they, I guess, a couple different things, when those younger folks become professionals or become successful, so that we can continue to bank them, but also when the transfer of wealth that is occurring now, as it continues to occur from the baby boomers to their kids. And so how do we engage those folks? And I think, from my perspective, and I didn't say this on the front end, anything I say today is not a position of CRI or any of our affiliates or subsidiaries. This is basically my perspective it's my perspective. So if it's correct, if it winds up being correct, that's great for CRI. If it winds up being incorrect, then my fault. But so I'm not endorsing anything, but I do think crypto it appears to be possibly a mechanism to reach younger folks, earlier in their life cycle and in their as consumers. So similarly to Cornerstone's polling, which all that was Cornerstone polling, Indig, which is a company that is a significant third-party provider, if you will, of crypto-related services, and they do partner with financial institutions. Their polling said 22% of American adults own Bitcoin, which is more than the 15 I mentioned earlier, obviously. And 80% of Bitcoin holders would choose to store it with their financial institution. And this poll is actually a little more recent. So there's, at that point in time, more folks are acquiring crypto, and there's more thought process around, I'd really like to use my own financial institution if they would offer it. And then lastly, 71% of Bitcoin holders would switch their bank or credit union for one that offered Bitcoin products, which is very interesting. And then to kind of bring that full circle back to from a bank or bank's financial institutions perspective, financial services leaders remain skeptical of the value that cryptocurrency has as an asset class, as we all do. And individual cryptocurrencies have lost market cap at times. Well, very much so today. During the COVID-19 crisis, cryptos experienced volatility, and their reputation was tarnished by the association of Bitcoin with criminal acts such as the Twitter hack. We'll talk more about this kind of stuff here, I think, on the next slide, actually. So we've all been hearing about crypto, which is probably why most of you are on here. We're dealing with crypto at some level. We as a service provider, we've got banks that are asking bank clients that are asking questions, but quite frankly, we've got individual tax clients and other that are investing in crypto or asking about crypto. There's tax ramifications. The customers are probably asking financial institutions about whether they provide these services and or when are you going to provide these services. And from a financial institution's perspective, you've got customers that are either investing in crypto. This polling would suggest 80% of them on crypto. But if they're not doing that, it could be, if you bank C-stores or other, there's the gas stations I go to, almost anywhere I stop, it seems like there's a Bitcoin ATM these days, not just a regular ATM, but a Bitcoin ATM. So those are some bank is banking that C-store owner. So whether we realize it or not, we're all being touched in some way, shape, or form by crypto as it evolves. my clicker working here? Okay. So that's where the conversation's been. A lot of that data has come out this year. I've been to a lot of banking and other related fintech related things, and cryptocurrency is a big topic, and for all the reasons that we just talked about. But in the last, I guess, 3 weeks, I'm losing track of time, there's been also some bad news. And that has been, as I mentioned earlier, the value, the aggregate value of crypto that's out there, cryptocurrency that's out there, has declined from 3 trillion to 1 trillion. I saw this weekend that Bitcoin, which has declined, I believe, 70% from its peak, which is the most commonly known and held Bitcoin, cryptocurrency, that it is now under 20,000 a share. That was as of Sunday. I don't know about yesterday. I was in meetings, but Terra USD, which is, and we'll talk about this in a minute, it was a stable coin designed, it was a very prominent stable coin designed to maintain a one-to-one relationship with the US dollar. Did not. In fact, I think it has completely gone away. It plummeted because it did not maintain that. And I think it was, my understanding is it was linked algorithmically, and there's a couple different ways that can happen. So the algorithm didn't work, if you will, and resulted in the collapse of Terra USD. Again, very prominent. If you're following this stuff, that resonates with you, and you probably saw it. Coinbase, one of the leading providers of third-party service in the crypto space, partnering with financial institutions, other businesses, and providing services to consumers, has been directly impacted by this, and I believe that they are laying off 20% as of, I think, this weekend, if not the end of last week, 20% of their workforce. But they're very commonly known, and they're a public company. In fact, they're a public company that was pointed to as a kind of like, this is where cryptocurrency and this industry is going. This Coinbase has enough structure and whatnot, and marketability to be a publicly traded company, and they're laying off 20% of their workers. Celsius is in the cryptocurrency space. They actually make cryptocurrency loans, if you will. So they make loans to individuals based on it. Bottom line is they have customers. They make loans based on crypto deposits that they receive from other customers as a means for that customer to get yield. Very, very well known in the industry, and they have basically ceased activity. So they're not ceased as in closed down, but they're ceasing activity. I do think we've seen there's cryptocurrency kind of has a bad rap, if you will, around scams and things like that. And we have seen ransomware attacks where they wanted to be paid in Bitcoin because they felt like that wasn't traceable. So that's kind of bad press. And then there's also some environmental concerns around cryptocurrency in that, and more specifically blockchain, because blockchain requires an enormous amount of energy. And so there's some concerns around that, about how crypto continues to evolve in its relationship, its obvious relationship to gosh, I'm losing my thought, to blockchain. Sorry. Okay. So with that, I believe we got a poll question next, Hillary.
The first poll question, recently, can you go to the next slide?
Yeah, the next slide's got the answer on it.
Oh, it does. Okay. Recently, polling regarding cryptocurrency suggests wishes the following. The cryptocurrency is viewed as a safe alternative to traditional investments. Consumers believe Bitcoin is a fiat currency, that consumers would prefer their crypto investments be held by their financial institutions, or D, none of the above.
If you can't see them in that view, Hillary, I can read them off.
I pulled up a separate view.
Gotcha. Okay.
And remember, you need to answer at least 5 of the 6 poll questions to get your CPE credit. So about 85% participating. Few more seconds. So the answer is D. Or C, I'm sorry.
Yeah.
I haven't had lunch. C, consumers would prefer their crypto investments be held by their financial institutions, as Doug went over in the
Okay,
steps.
got it. So how many got it right? 80%. Okay, so we haven't put y'all to sleep yet. So we'll move on. And that's, well, I guess that's what I was actually supposed to do, was go to the next slide so they could see it. So there's your C is your correct answer. We'll move on. Okay, so is cryptocurrency a digital asset? All right. A crypto asset is generally any digital asset whose provenance is tracked via a blockchain or distributed ledger technology, which we'll talk about more, both blockchain and DLT infrastructure, with ownership or control determined by a cryptographic key. So crypto, the answer is a crypto asset is a digital asset. Cryptocurrencies are a type of crypto asset. So digital asset, cryptocurrency. So from here, we'll talk about a handful of different crypto assets, cryptocurrency being one of those. So cryptocurrencies are a type of crypto assets that are digital representations of value that function within the community, enabled through peer-to-peer networks of its users as a medium of exchange, unit of account, or store of value without having legal tender status. Their value is driven by market supply and demand. So cryptocurrency is a digital asset. It derives its value from what someone is willing to trade it for, essentially. But cryptocurrency is a currency, and we'll actually, let me go to the next slide and I'll kind of address that, because I think it's maybe sometimes folks get a little confused about what cryptocurrency actually is supposed to be. So cryptocurrency is supposed to be a currency. It's supposed to be used to acquire, to buy and sell goods, if you will. It's evolved as probably more of an investment. And I say that loosely, again, no endorsements here, as an investment, but it's truly a currency, and the value of it theoretically should be derived from its acceptability in the marketplace. So meaning I would presume that the more widely cryptocurrency is accepted as a medium of exchange, the higher the ultimate value would be in the marketplace. Long term, to the extent it's not accepted, then why does it have value? So that's kind of where you get into some of the things that go on as far as people investing in crypto, and they're looking for a return as if it's an investment, but yet crypto produces nothing. It doesn't have a discounted cash flow. It doesn't have a strategic plan. It doesn't have long-term, it's a currency that is being used as an investment vehicle. So cryptocurrencies leverage advanced mathematical formulas to create digital assets. The value of these digital assets ebbs and flows, but much like traditional currencies or stocks. I said that wrong. So much like currencies and stocks, it ebbs and flows. It fluctuates. Sophisticated cryptography prevents counterfeiting and fraudulent transactions. And then as kind of an additional, as a definitional, the crypto prefix refers to advanced mathematical codes used to store and transmit transactions in a secure format. A stable coin, as I was mentioning earlier, a stable coin is a cryptocurrency or digital currency. So it also is a crypto asset, but it's a currency structured to minimize price volatility, thus enabling it to serve adequately as a non-fluctuating medium of exchange and store of value. Typically, it's pegged to a fiat currency. Fiat currency would be like the dollar. So a government-backed, in simple terms, a government-backed currency like the US dollar. A stable coin is pegged to it, and it purports to maintain that one-to-one value. And as I mentioned earlier, if that doesn't happen, then that's problematic. But stable coins were invented to avoid fluctuations in value. Central bank digital currencies are a concept being explored by central banks around the world in an effort to digitize traditional fiat currency. So, and I'll talk about this a little later, but the Federal Reserve, and I think it's coming from a couple of different directions, but the Federal Reserve is evaluating the viability of creating a digital dollar. And there are other countries that are doing the same, but this would be a crypto asset that is a digital currency that is actually issued, if you will, by a central bank in a particular country. In this case, ours would be the Federal Reserve Bank. Unlike other digital assets explored here, CBDCs are a central bank liability that would carry full currency status. There are a number of models being evaluated, and it talks about, design is based on, how it would be used. So stable coin is not backed. It's not backed by a central bank or a country. CBDCs are, and there's more to come on that. And right now, the United States has not made the determination of moving in that direction. Another crypto asset that's commonly discussed and is a little different is non-fungible tokens. So non-fungible tokens are cryptographic assets that are also on the blockchain. They have unique identification codes and metadata that distinguish it from each other. Unlike other cryptocurrencies, they're not for trading and exchanging. They're actually used to represent authenticity and ownership of for a digital asset like artwork, music, videos, other things like that. So a non-fungible token, you probably have heard and seen NFTs. They are also a crypto asset, but they're not made as a means of exchange as the other currencies that we've been talking about. Okay, we hit another poll question.
Poll question number 2, which of the following are digital assets? Cryptocurrency, CBDCs, NFTs, or D, all of the above? This one's about 85%. More seconds. We're going to end the poll. Okay, and the answer is D, all of the above.
So cryptocurrency is a digital asset, CBDCs are a digital asset, NFTs, and we also talked about stable coins. So those are all digital assets in their own right. There are other digital assets, but I was trying to cover some of the more common terminologies, if you will, ones you might hear about more rather than less. Now, all of this, that environment, if you will, is based on decentralized finance, or DeFi. And so I'm gonna read over this because I think it's important to get the granularity, and then I'll speak to it. But Investopedia defines DeFi as a concept whereby financial products are available on a public, decentralized blockchain network. This makes them open to anyone to use rather than going through an intermediary such as a bank or brokerage firm. DeFi refers to a system where software written on blockchains makes it possible for buyers and sellers and lenders and borrowers to interact peer-to-peer or with a strictly software-based intermediary rather than a company or institution facilitating a transaction. Multiple technologies and protocols are used to achieve the goal of decentralization. So the concept of DeFi is it takes out the middleman. You don't have to go through a traditional community bank or credit union or whatever. You can go in this marketplace and literally lend, borrow, and do commerce peer-to-peer, presumably using a means of exchange like a cryptocurrency, and with the blockchain driving that process. So that's the concept of DeFi is taking out the middleman. We'll talk about later what kind of some of the problems that represents. Obviously it creates opportunity, but also presents certain challenges. So Ethereum, which is a company that also has cryptocurrencies, and I believe they're in the blockchain space as well. This is how they define DeFi. It's a collective term for financial products and services that are accessible to anyone who can use Ethereum, anyone with an internet connection. And that speaks to accessibility. Maybe people that are unbanked or underbanked or otherwise don't want to go through a traditional financial institution. They could come through DeFi. DeFi uses cryptocurrencies and smart contracts to provide services that don't need intermediaries. A smart contract is a type of Ethereum account that can hold funds and can send/refund them based on certain conditions. So Ethereum has been out there. It's one of the commonly known companies in this space, and they have a relevant customer base that is using their products for these means. A couple different definitional things just for kind of maybe to get it clear in your mind. A smart contract is an electronically enforceable agreement whose terms are written in code and does not require a third party. So the way I think of it, for me to be able to understand, I think of it as embedded in the process, essentially. DeFi applications, you got to get all your acronyms down if you want to talk about this over dinner with somebody. So DeFi applications are known as dApps, and they facilitate the use of smart contracts and other automated processes. So, there's all kinds of crypto, DeFi, all those things. Decentralized finance takes out the middleman, and that is appealing to a segment of customer for sure. Okay. So here are some of the characteristics or dimensions of DeFi. You hold your own money. You control your money and how it's spent. Transfer of funds happens in minutes. Transaction activity is pseudonymous. You use the word pseudonymous all the time, Hillary, right? It's very common.
Yeah, it's my favorite word.
I have trouble saying it. Pseudonymous. DeFi is open to anyone. The markets are always open, not 9 to 5. It's built on transparency. Anyone can look at a product's date and inspect how the system works. Now, pseudonymous means, this is out of the dictionary, writing or written under a false name. So you can, my understanding, the way again, this is kind of my take on what I've garnered, is that you can see the transaction, and you can see there was a transaction, and that transaction on the blockchain can't be altered, but it is actually done not anonymously, but pseudonymous, which means you don't actually use your real name. But there is transparency in that the transaction is there and can be viewed. But as to actually who did it, that is not transparent. So again, under the DeFi umbrella, the big thing we've heard about and everybody struggles with getting their arms around is blockchain. The backbone of some forms of crypto, like Bitcoin, is the blockchain. At its most basic level, blockchain refers to the blocks that get added to the chain of digital records. The chains provide a continuing list of records with data that can only be added. Once validated, the information cannot be deleted or altered. The blockchain is a type of distributed ledger technology. So when people talk about distributed tech, DLT, if you will, to get all the acronyms down, normally they're talking about blockchain, but there are other means of DLT, if you will. And so blockchain is the most commonly referenced, and it is a distributed ledger technology. And that's, the simplest definition that I have seen of it. I've got a couple other things on it I'll move on to. Okay, so with the concept of blockchain is DLT, then what is DLT? Although a blockchain is a form of distributed distributed ledger technology. Distributed ledgers do not need to be in a chain like the blockchain, but simply a distributed ledger is a shared database that is spread across different computers or nodes. A node is a computer. A lot of times that terminology is used, but it's just simply a computer. A distinguishing feature of the DLT is it often restricts who can use, access, and operate as a node, as a computer on the network. The permissioned model has become more popular with banks. So, and I'll go to one more slide before I speak to that one. So the block is a ledger. It's distributed. There are transactions, there's confirmation, there's proof of work, there's result. I think of it as a big spreadsheet in my simple mind that is accessible for viewing by, and that creates the transparency. Again, it's done on a pseudonymous basis, but I view it as an automated ledger in my mind. And so I don't think that most people don't understand the inner workings of blockchain, but I don't think you have to. I think we have to, from a bank's perspective, we've got to partner with folks that do understand the details, but we just need to conceptually understand it and do our due diligence on the companies involved. But that's the definitional view of the blockchain in a distributed ledger process. And all the cryptocurrencies that I have looked at or for any reason are on the blockchain, but I think there are some that are not. And as mentioned previously, there's 10,000 of them. So I don't know how many thousand aren't on the blockchain. And there are different blockchains. There's not a singular blockchain. Okay, trying to get all the poll questions in.
All right, next poll question. Which of the following is true about DeFi? A, your money is held by companies. B, payments are made via manual processes. C, transaction activity is pseudonymous. That is a hard word.
Yeah, it is.
D, markets are open 8 to 5. I think everybody should get this one right because of that special word. Should have practiced that word earlier.
Yeah, I had to I want to say pseudonymous. So pseudonymous. I don't know. I still can't say it.
Two more seconds. It's at 90% of folks answering. Okay. So the answer was C, the transaction activity is pseudonymous. All right.
You know, DeFi, your money's held by you, not by other companies. Payments are made via the blockchain. Transaction activity is pseudonymous, and the markets are open 24/7, like Waffle House. If you're from Georgia or the South. Okay, so how is crypto being used? And I won't get into all these, but these are some good examples. So number one, the most common is a store of value. There's also custody and wallet providers in this space that are maintaining the asset through a wallet for the crypto asset for individuals and others. There are interest-bearing accounts out there. There's payments. There's lending, there's exchange trading, there's broker dealers, insurance. We'll go through some of these individually, but in fact, that's what we will do. I'm not real sure why I listed them all here because we've got them all individually, and I'll try to move fast so that we can cover all the slides. So the store of value theory relies on certain attributes of cryptocurrencies. That's its scarcity, decentralization, durability, fungibility, portability, and divisibility. So that because the supply of Bitcoin and similar cryptos is relatively inelastic, but a store of value is as an investment tool is the way I think of it. So that's the way it's being used most commonly, I think, by an individual consumer today. Crypto custody solutions are created by third-party providers to store and secure crypto assets. They have to be somewhere. They're digital. You don't carry them in your pocket, but they're digital, but they have to be housed somewhere. Third-party customer solutions come in two forms, and this is kind of important. One is online, where you have a hot wallet, and the other one's offline, which is a cold wallet. Online systems store encryption keys in internet-connected systems, while offline solutions store keys in hardware devices with no internet connectivity. So if it's hot, it's linked to the internet, and that results in a gosh, let me think of the word. Well, it makes it easier to use, and it makes it, I guess, more user-friendly, but it also creates exposure. So most of the time when we're talking about banks offering this service, we're talking about cold wallet, where you don't have access to the internet directly from the wallet. Interest-bearing accounts, individuals that want to earn interest. Again, think about this. This is all in a DeFi setting now. This is not going, they're not going to the store. They're not going to the bank. Individuals who wish to earn interest can lend out their crypto to interested borrowers. And so there's marketplaces for that. And you have crypto, you can lend that crypto through a medium of exchange, presumably the blockchain. And there may be an intermediary that's providing the venue, if you will, for that to take place. But you can go in, lend it, you get a yield, presumably higher than you would get if you went to your local community bank. And that product is out there as a viable product on a routine basis. Cryptocurrency can be used for P2P and B2B. That depends on the cryptos I've heard of, like Bitcoin, for instance. I'm sure you all have heard athletes, for instance. I've seen a couple where professional athletes have said they want their compensation in Bitcoin or something like that. But Bitcoin being the most common, and I haven't said this, but I'm going to say, I hadn't explicitly said it. Bitcoin is not it is a type of cryptocurrency. So a lot of people reference Bitcoin and cryptocurrency synonymously, and that's fine, but Bitcoin is a cryptocurrency. It is not cryptocurrency. But most common being Bitcoin, but somebody's got to be willing to take it for you to use it this way. And another issue that has arisen over time is the fluctuation in value of cryptos have made it difficult to use it for payments. And that is in part why stablecoin kind of ascended, if you will, as a viable option, because of the peg that we now know doesn't work all the time, but the peg that we see in the structure of the deal. You can use lending. A common use case of DeFi is open lending platforms. These are usually simple, decentralized dApps that allow you to either lend your digital assets to others or users to earn interest or borrow digital assets from others. So this is when you're the borrower as opposed to interest-bearing assets. Exchange trading. Crypto exchanges, you got to have a place where you go buy crypto. So there's a variety of crypto exchanges, online platforms used to buy and sell crypto. You got to have a way to buy it. You got to have a way to sell it. Crypto exchanges are how you do it. Overarching here, though, those are largely unregulated. It's not the New York Stock Exchange. It's whatever environment has been created by that third party. So largely unregulated. Broker dealers can facilitate cryptocurrency, the buying and selling, but a lot of brokerage houses don't. A lot of large, more well-known brokerage houses at this point don't. Some do, but a lot don't. There have been insurance products created in this space. Those insurance products include, but most of the insurance products are about crypto. So insurance in the event that the market crashes, or in the event that there's a hack and you lose your crypto, or your smart contract, which is a digital contract, basically, as we talked about earlier, if it fails. So that's most of the insurance products that are in this space. asset management, there are companies out there, asset management companies that are out there that are providing, managing portfolios for folks that want to have them use their expertise to manage a crypto portfolio in a variety of ways. So that's just some of the various products and services that are out there. We'll hit another poll question.
The full question is, which of the following are not potential uses for cryptocurrency? A, alternative fuel, B, payments, C, lending, and D, exchange trading. A few more seconds, just when I gotta speed things along. Go ahead in the full question. About 90% of folks got it right as a alternative fuel.
All right, so we'll press on. We are. All right, so what's the regulatory environment? So I'm gonna pick up the pace so that we can get through all the slides before. So the FDIC in May of 21 put out a request for comment regarding digital assets. The OCC has put out several interpretive letters, particularly under the previous regime, but there is another acting OCC head of the OCC. They had a variety of interpretive letters that they put out, and I won't cover all those for the sake of time, but there were references to things that banks could consider doing, and that all kind of came together here in recently. So the OCC interpretive letter 1179 requires advanced written approval for national banks and S&Ls in order to get into crypto activities. So let me read this and then we'll go through the other ones quicker. So you have to obtain supervisory non-objection. The bank should demonstrate that it has established an appropriate risk management and measurement process for the proposed activities, including having adequate systems in place to identify, measure, monitor, and control the risk of its activities, including the ability to do so on an ongoing basis. So that's the guidance. And what that really says is, you got to ask for permission to do anything in this world, in this crypto world. But we're not going to tell you exactly what you got to do and be able to do it. Just make sure you do it and that you manage the risk appropriately. In other words, operate in a safe and sound manner. So at this point, I would categorize the bank regulatory guidance as for community banks as overarching. It's high level. It's like, you got to ask us and you need to have a plan. And we'll let you know if we're okay with your plan. In a joint statement in November of 21, there was an acknowledgement of certain services that banks might consider. It didn't say you could do these. These were just the types of things that they say they are evaluating, and they're hopeful of putting guidance out at a later date. So crypto asset safekeeping and custody service, ancillary custody services, facilitation of customer purchases and sales, making loans that are collateralized by crypto, the issuance and distribution of stablecoins. Now, again, remember what stablecoins are. Activities involving the holding of crypto assets on the balance sheet. So these are all things that they would say, a community bank might contemplate these things, and we're evaluating them, and we're going to put some guidance out. But right now, the overarching guidance is make sure you do it right, whatever it is you're going to do, and you got to ask ahead of time. NCUA said something very similar, except credit unions don't have to ask for permission. They can go do it, and it'd be evaluated later, I presume. So that's kind of an interesting dynamic there. No permission required, but same elements, safe and sound practice need to be in place. FDIC put out something very similar to the OCC and said, hey, these are the kind of things that we would expect that you might be doing, and you need to ask for permission before you do it. FinCEN has had guidance out since 11. Money laundering is an issue in this space, or potential for money laundering is an issue in this space. What we're seeing is that anybody involved, the companies that are involved in cryptocurrency. So an example would be a crypto ATM. They have to register with FinCEN similar to an MSB. And then they are required to have what I call MSB-like. They have MSB-like requirements, like you got to have a BSA AML program. You've got to you got to have a BSA AML audit. I think in certain instances, depending on the state, you might have to have a financial statement audit. So they've got, FinCEN has pushed down and said, hey, if you're dealing in this stuff, we're going to treat you essentially like an MSB and have those requirements. And, you know, again, the thing is that your bank, you may be banking these folks. So you need, if you're banking folks that are trading in crypto in some way, shape, or form, then you need to be applying due diligence to them similar to what you would be doing in MSB, and make sure that you're following whatever the specific state guidelines are that are set up to comply with FinCEN. The White House did put out an executive order. These are is generally what it did. And there's been a little activity since this, but not that much. But there's the 4 overarching things that the executive order covered. That it needs to address the lack of clarity in U.S. rules, assemble a unified regulatory framework for crypto, stablecoins, and NFTs, establish a government-wide strategy for digital assets, task federal agencies with assessing the risk and opportunities posed by cryptocurrencies. And it was much more detailed than this. That's absolutely the Cliff Notes version. And there's other things happening. I'll just say this. So the SEC has put out SAB 121. So for publicly traded companies that are providing custody service, there's some specific requirements, particularly regarding disclosures in their financials and whatnot. The SEC has put that out. SEC is also staffing up. So they're saying, hey, if you're in this space, we're about to regulate you from a financial reporting perspective. Also note this, some people think of a cryptocurrency as a security, and some people think of it as a currency. There is pending legislation in the House. I don't know if it has legs or not. I just read this, I think the day before yesterday, so it's pending legislation that would have the Commodities Futures Trading Commission, which is who oversees currencies, be the regulatory authority for cryptocurrencies and the like. So that is the direction of that legislation. I don't know if it's endorsed by the White House or any of that stuff. But that's what's out there. Okay. Poll question number 5.
Sorry. All right. Who is the primary regulatory body for cryptocurrency? A, the OCC, B, the FDIC, C, CFP, B, or D, none of the above. That's a lot of acronyms.
Who is the primary regulatory body for crypto? OCC, FDIC, CFPB, or none of the above?
Give everybody 2 more seconds. Remember, you don't have to get it right. You just have to answer it to get credit. CPA.
Close it.
All right. The answer was D, none of the above.
Yeah. There is no primary regulator, but there's proposed legislation that would put it under the CFTB. But right now there is no primary regulator, which is part of the confusion. But it's evolving, and there's activity. So what crypto partnerships, what crypto distributed ledger partnerships should a community financial institution consider? I think, you know, there's a variety of options, whether it's payments, lending, settlements, custody. In my simple mind, I think what the polling says is that your customers are interested in custody and wallet. And that seems to be where the focus is on anybody who's evaluating this. I mentioned Indig earlier in some of their polling, and they're a third-party provider. I saw them at a conference last week, some reps, and I said, how many small banks do you have, or community banks do you have signed up? And they said, what was it? 2 to 4 dozen.
Right.
2 to 4 dozen. And I had to do the math on that. Okay. That sounds like 25 to 50 to me. And they're probably salesmen, so it's probably closer to 25. So I don't think anybody's missing the boat right now. It sounds like, and they're not the only provider, so there's others, and you've got trusted advisors that you would seek out guidance from. But that's, that folks are moving in that direction, but it's not robust at this point. And I don't think that, the recent events have been particularly helpful. If you're interested, go take a look at Vast Bank and what they're doing, and their stories in here. And we're 3 minutes left, so I won't try to cover it. We got one more poll question, but Vast Bank is a bank that made a conscious decision to become a crypto bank, and it was a traditional, closely held family bank, community bank prior to that time. And the last poll question at 11:58.
Which of the following represent possible crypto solutions or partnerships? A, payments, B, lending, C, custody and wallets, or D, all of the above? About 2 more seconds. Okay, the answer was D, all of the above. 93% folks got it right.
All right, good. So, not so final thoughts on crypto. Be intentional about being educated as a community banker. Be intentional about getting educated. There's plenty of resources. There's a veritable plethora. I came up with that. I don't know. Of related webinars in the marketplace on a routine basis. There's no shortage of articles. I mean, and they're in the mainstream media. I mean, Wall Street Journal, New York Times, especially right now. There's plenty of opportunities to get educated. So be intentional about it. Closely monitor regulatory developments. It is difficult to make strategic decisions when there's not clarity coming from the bank regulators, but I think that's coming. And I think that's the intent, and it's been the intent. So I think we're going to see more robust, clear regulatory guidance, hopefully before the end of this year. Maybe that's a good webinar for us to do when that comes out to simplify that and present it. Do your due diligence. It's like anything else. This is what, while banks don't, community banks don't, dabble in cryptocurrency every day, what you guys do, and ladies, what you do is you evaluate and manage risk all the time. You're in the risk-taking business. And part of that is evaluating third-party partners and due diligence. And there's some recent, very pointed, good guidance out there to do due diligence. Should you be evaluating a third-party partner? So do your due diligence. And this is no different than what's been happening in the banking system for eternity. And then I'd encourage you to engage your trusted advisors. I say, getting your arms around crypto probably take a village, and that includes, your legal advisors, your reg advisors, your internal resources, your third-party auditors, and so forth. So with that, we do have 2 questions, but they went away, so I don't know. With that, we'll press on, and we would, if you are external to CRI, we do ask you to connect with us. We're all over social media, so please connect with us. And thank you again for taking time out of your schedule to be with us today. And thank you, Hillary.
Thank you for your time. Thanks, Doug.
Bye-bye.